I'm here with Steve Kik. Good to see you, Steve.
You want to do the intro today, Grant?
I was going to say first, everybody enjoy Steve. I think this might be his first podcast since he cut his hair. Like, isn't he a good-looking guy? I mean, seriously. I mean, way to go.
The feeling is mutual, Grant. Thank you very much for that. It feels a little bit different having cut my hair. It's kind of like a new person, if you will. So I'm looking forward to 2025 here with a little bit less hair and hopefully a few more deals, right?
That's the truth. Ain't that the truth? We've been through a couple of years, some hard times. So it is only one way to go when you're on the bottom. We are going up in our industry.
For sure. Exactly. Yep. So looking forward to it. Well, let me reintroduce everyone here so we can get acclimated. My name is Steve Kik. I am the host of the MMLA Connect Podcast. I am a loan officer with LMCU and a proud member of the MMLA. Today, I have Grant Spencer for short here. But I love that name. You know, you got a great name, Grant. Grant is a mortgage branch manager with Michigan First Mortgage, right?
Credit union. Yeah. But Michigan First Mortgage is our DBA.
Okay. Yep. I saw the sign in the back and I was like, I thought it was Michigan First Credit Union, but then I saw that Michigan First Mortgage. So, Grant, tell us about your career in mortgages, how you made it to Michigan First, but also, you know, what you may have done before that, what got you into the business. Let's hear your story.
Oh, right. Geez. So I'm going to do my best to keep this short. When I got my CMB, my sponsor told me, Grant, you really need to go ahead and take long conversations and get them down to like succinct points. So I'm going to really do my best to do this. So I've been doing this now as of next week, 23 years. And initially got into this thinking I was going to do it for just a couple of months. So we all fall into mortgage in weird and strange ways. I think everybody's story is super unique. I mean, nobody goes to school to come out and say, I'm going to go be a loan officer. Right? I'm going to be an appraiser. Nobody does that. So long story short, how I ended up getting into the business was I spent my last year in college in Mexico. I did study abroad down there, and oddly enough, cheaper to go to school in Mexico for an entire year abroad than it was to go in East Lansing. You know, figure that one out. Hey. So I ended up coming back to the States and graduated. And I'll just say it. So this was the moment where back in the day when I went to college, you could still run a bar tab at different bars across town. And, you know, the bartender knew you and they'd run you a line. You just go ahead and pay when you could and you come back, et cetera, et cetera. Well, I'm back in the area and all my bartender buddies knew that. And I had graduated from college. So I'm getting all of these phone calls all the time with Grant, listen, you're back. You got to settle up your bar tab with us, right? And so, you know, at the time, it was a pretty large bar tab I was running, you know, with all these guys. And I'm like, how in the heck am I going to pay back these guys for 4 years worth of drinking up in college and be able to like do something with my life, right? So Back then, I think it's still around. I put my resume up on monster.com. Remember monster.com?
Yeah.
I think it's still there.
Does it still exist?
I think so. But then again, doesn't MySpace still exist too?
Gosh, I don't know.
So I get this call from this place called AmeriQuest Mortgage. And they say, have you ever been interested in doing the mortgage business? And I thought to myself, that's real interesting. I didn't know there was a T in mortgage. Huh. So started in the subprime world back all those many, many, many years ago. My first year in the business was this. This is my first day. Was, hey, Grant, welcome to the mortgage business. There's two things that we need to talk about ahead of time. First, this is a calculator. We use it to compute numbers to be able to tell people what their mortgage payments are. And this device over here, this is a telephone. We punch the numbers to communicate with people so we can talk about mortgages. Best of luck to you. So that was it. That was the first day in. Was, you know, sink or swim, get on the phone, sell
day training.
Yeah. And like the first loan program I ever learned about was the AmeriQuest, bread and butter program. the 228 with a 3-year prepay priced at 105. So that was certainly a loan from way back in the day.
You
Was
wrote a
with
lot of
them.
those loans?
Well, back in the day, you would write a lot of strange and odd loans like that for sure.
Yeah.
There was a lot of subprime business back then. But anyway, moving forward, was with them for a short period of time until I figured out what was going on in subprime. Left them, went over to do a tour of duty at then Quicken Loans, where I was a traditional banker, senior banker, executive banker, President's Club banker, ultimately was the director of mortgage banking. Ran a team of 32 guys on the phone doing direct all day long. Was with them for quite some time, about 4 years. And then I left them. Wanted to go back and do my master's degrees, so I went back to Walsh College. And during that time, I started over at Citibank as a mortgage consultant with Citibank, City Mortgage for some time. I got 2 master's degrees, so I have an MBA in finance and I have a master's of science in finance, which are just really 2 really cool, expensive pieces of paper you can put on the wall. Not to knock them, but I always go back to what they used to say in that movie about you can really learn a lot of that education with like 50 cents worth of late fees at your public library kind of thing. But it was
Listen,
a real
Grant, hey, you're one of the most accredited mortgage professionals out there, so you should feel pretty good about that.
I'm grateful for it. I love challenges, Steve. I'm telling you, it's just a thing with me. I love to overcome the mountain and just do better. I love to be able to help others, really, with what I do. I've always believed really strongly that when you're here in this life, you're taking a test, and when you take that test, it's to show just how extraordinary you can become to be able to help others and bring other people through their challenges in life. And I do that a lot of times with the things I do on the side. So, one of the things I've been doing since 2015 is I volunteer my time with an organization called Divorce Care. I got divorced about 10 years back and went through their program. And I give back in that program each and every month to go back and teach financial survivorship and to teach people how to heal through a divorce, how to be able to grow beyond some of the issues and challenges that they've had. I give myself to our industry. I do everything in my power to be able to help others because, and you'll see it. You see it in my tagline in my emails, and I really, truly, truly, truly believe this, right? What we do is a real honor. There's not a whole lot of jobs that you can, in a 5-minute conversation, totally change somebody's life. Like just the total trajectory change. Home ownership, having a family, putting down roots. You know it. You don't need me to go through the whole thing. It's a real honor to do that. And I love making positive, lasting impacts in people's lives. If I can do that, then I have done my job as I go forward in life. So,
well, I appreciate that you shared some of the information. I too have been divorced, so I know what it's like going through that. And it's pretty cool that you not only went through the program to help yourself heal, but you're giving your time back now to others so that you can help them through the same process that you went through. So that's pretty special, Grant. I didn't know that about you. So I guess there is a big heart, underneath that rough, tough exterior there,
Oh, I'm cuddly. I'm cuddly, Steve.
Yeah, for sure.
Rough, tough exterior make me feel awesome.
Finished your, talking about how you got to Michigan First Credit Union.
Okay.
However,
we'll get back to that. Okay, so how did I get to Michigan First? We'll pick that part up, right? So I was at Citibank, right? I got these master's degrees, right? And I wanted to do something bigger with the career and bigger with my life. I just did, right? I'm always looking to take on that next challenge and overcome it, right? And I have taught and led in our business for years, and I love teaching our business. And I love being able to put people in a position so they can succeed and helping them get to that next level. So I left Citibank and I went on to the USDA RD. So I went to USDA Department of Rural Development. I was the housing programs director for the state of Maine. So I ran all of RD for the direct department. I ran the guaranteed program, the multifamily program, in enormous lots there. And then ultimately it took on that leadership position with the government for some time. Decided to come back to Michigan and help a old VP friend of mine who had started over at Flagstar build out a direct department with Flag, as I've been working direct for years, right? Your call centers, your number of bankers together, just cranking loans all day, all
Yeah.
night, and really successful in building out that department over at Flagstar. And then the idea was, I'd gotten to a point in my career where I wanted to take the next step and jump over into retail. And the opportunity came up here at Michigan First to come over and lead the mortgage branch team in Rochester, moving out of direct into street LO retail, knock down, drag down, the street fight, as Dan Sugg would say.
Yeah, baby.
And I love it. Like I said, we've got the best career out there. I mean, there's not a whole lot of careers that are just as fantastic and satisfying as what we do each and every day to be able to help other people. So that's how I got here.
And you've been there for how long now?
In the next couple of weeks, it'll be 7 years.
7 years. Wow. Nice.
7 years. 7 years. Yeah.
And you said how long in the mortgage business total? 23?
23. I start year number 23 in a couple of days.
I think it's pretty interesting. I talked to Brian View recently, and he, I think some of the industry veterans that have been around for a long time, I think, over 20 years or so, it's interesting how much, boiler room, if you will, hey, we were cranking out calls. Like, that was the mortgage business. Nobody, there weren't retail LOs going around and, trying to get business from realtors and all that kind of stuff. The mortgage banking industry has changed so much, but back then that was kind of the thing, right? Like you moved your way up if you could grow a team, and that was usually the teams were just doing outbound calls, right?
It's just the truth. What we do is not a job. It is a lifestyle. Your clients call you at 11 o'clock at night. There's an issue. You're here working early in the morning. You're working all the time for others around you to be able to put everybody in a better situation emotionally and financially for them and their family. So, you're always on in our business. And that's one of the things I love about our business too. It's like you just never hang it up.
It's funny. We talk about this and the relationships and building that and how that's a little bit different than, I started in a call center myself too at LMCU. I've been there the entire time. I've been here for 15 years. I've been in mortgages for over 12. But I started in a call center as well, right? Like that's how I learned. The calls were coming in. I didn't have to, do a lot of, I didn't have to do a lot of outbound calling myself, even at the time. I mean, people were calling in to ours, to our call center there, and the business was coming in. And then as I moved to, what we would call an outside loan officer, 100% commission job, the business was just really good at the time, right? So like for the most part, you just kind of had to answer the phone and be available for people to call you because they were calling, right? And for me, not until the last two and a half years, right, when rates went up and things really took a dive, did I really have to learn how to be more of an external LO, right? And that's just calling people back, and not that I wasn't before, but actually doing outbound calls again, right? Past clients, reaching out to referral partners, networking again, right? Like some of the things that some of us, I think, took for granted or maybe necessarily weren't doing. And we've had to go back to, or restart kind of doing some of those things as well, right? Feel the same way?
Yeah, really, it's been a paradigm shift over the last number of decades. I mean, you could really honestly make the argument that ever since 2000, we've been on a refi boom, really, up and down. Ultimately, we've been doing that for the last 20 years. When we take a look at where we've last couple of years and where we've been in regards to volume, where we're seeing current supply in the marketplace, rates as they currently stand, that really most closely resembles 1983 to 1989 at that point. And a lot of folks who were in the business back then, they're not in the business anymore. They're long since retired. But there are a couple of people that are still around that were during that time. and they have reverted back to a lot of the practices that you just talked about, and now we're going to go ahead and continue to build their business. And I'm going to add to that a little bit too. The people I'm referring to that have been in the business since that time, they never stopped doing a lot of those actions, even in the good times. They were
Yeah.
always talking to previous clients, networking, being out there, proactively talking to new agents and referral sources, and not taking the inbound stuff for granted. And, and it served them well. I think about a good kind of maybe parallel metaphor, whatever you want to call it. Think about like your great grandfather, grandmother who may have gone through the Depression, and when times were tough. And
And it was honestly, you talk about that refi boom. I started in 2012. So, like I said, it was still a refi boom. I was doing harps all day, every day, man,
Harp,
loved it. Harp was my best
Harp,
friend. That was my jam,
it was
coming
so
into the
great,
biz. Yeah,
so
for
great.
sure. And it was so easy, right? It was so easy. And,
Yeah,
and I was fortunate enough to come in at a time and really, cut my teeth where, the business was just coming in like that. There was a lot of people to help, a lot of refinances were happening, and you start to learn the business that way, right? The more loans you do, the more stuff you're going to learn. Hey, this came up or this or that, and really you start, uh, cataloging that information, right? And knowing, okay, like this happened 2 years ago. What happened? What did we do to clear that condition, or go to the title company or whatever? And that experience, ultimately does matter. The loan officers who have been through a handful of deals, if you will, just know, they know a little bit more. Not to say, and I'm not to say that new loan officers don't understand it, because I was a new loan officer and everyone is a new loan officer at some point. And I think we have a big task at hand to start hiring more young loan officers as we talk about. I mean, the
that's a
business,
whole different topic right there.
it
Yeah,
is for sure. The business just keeps getting a little bit older, right? And there's, for some reason we're not making it a nice career path, or making it look like a nice career path for people right now because of the last couple of years, so we gotta figure out how to change that, and it has been a great and financially lucrative, even in the lean years, to be honest. Like, we are fortunate enough, where the mortgage business, when you do a good job, it pays well, right?
yeah. I mean, there's no doubt about it. I three topics really there to kind of go over. Right, I always say this about our business. Right, there's no handbook. This is just God's honest truth. Right, what we do as your new loan officer is you walk through a minefield. That's it. You're walking through a minefield.
Yeah.
And you really will need to have somebody who's more experienced, someone to learn from, who has the map to the minefield, who can say, hey, I wouldn't end up doing that. Or maybe you should ask this question up front prior to us getting the appraisal done and getting 3/4 of the way down the line before something blows
Yeah.
up. And you lose your leg, you blow up, there's a mistake here, there's a mistake there. You learn that over time. And there's no way to really translate that other than like kind of a mentor-mentee relationship as you bring somebody into the business. And one of the things I love doing, and when I train LOs and I talk to them about how to build their business, is to share with them that roadmap, that landmine map that, listen, I stepped on. Let me help you not step on that landmine.
Yeah.
And,
Don't
and
do
that,
what
that
I did. Don't do what I did, right?
exactly. Now,
Learn from
mind
my
you, I have
mistakes.
kids, right? That doesn't work half the time, right? They still need to sometimes learn the hard way. But, you do your best. Right? You really put yourself out there to put them in a better situation. You hit on a real big point, though. I will just say it, I ask my kids about this stuff, right? Because I've got a 15-year-old, a 13-year-old, and I've got a 2-year-old, right? So, I do children in flights, right? I've got flight 1 and I got flight 2 of kids, right? And I ask them about their kids and their friends and things like that. And doing mortgages just isn't as cool as it used to be. Like back in the day, doing mortgages was like, you do mortgages? Man, you must be doing great. It was a thing. And now my they look at us like, you do mortgages? Oh, you must be old, right? I'm like, I'm not old-ish maybe, experienced, but I got this report from MGIC. You guys probably got it too. Their loan officer survey. The
Yep.
average age of an LO right now is 55 years old.
55.
I mean, when you think about it, let's just be real honest, okay? If we got an average LO of 55, okay, and we've got an aging leadership across the entire industry, right? From title to mortgage insurance to leadership at lenders, et cetera, et cetera. And yeah, no, don't take offense to anybody who's listening to the phone call. We're all getting more experienced as we get older. There's going to be a big, giant vacuum suck of knowledge that in the next 10 years, as people begin to end up retiring in this business, we still have a growing number of people who are in need of mortgages to be able to purchase homes. And we have a declining amount of people who are entering into the business and people who are leading the business. We are going to get into a position where we're going to desperately need people to enter into this world. Same way about appraisers, right? I mean, if you look at the from USPAT puts out a report every year and it talks about the average age of appraisers, and it's like 63 years old right now, average age of appraisers. And I mean, you look at like the number of appraisers like Washington State. Washington State has only a handful of, I'm talking like literally 24 appraisers for the entire state, something to that effect. That's why you got to pay $1,200 for a 1004 if you do a deal out in Washington, is because there's just such a limited supply of appraisers in that area. Same thing with our business, right? So it's a question of how do you make mortgage fun again? How do you get that college student who's just getting out and wants to go ahead and learn the business, or someone who maybe wants to skip college altogether and learn our trade of the mortgage business, to come along with us? How do we get it to be fun? How do you get the kind of that sexiness back into our business, right? That people want to go ahead and join with us to go ahead and be that next generation. That's a big question, right? And at 46, I don't really know how to answer it other than just to go ahead and talk about how amazing our business is and how cool it is to be able to make these impacts into people's lives.
For sure. I agree with that. And you make a good point. I have, kind of taken a step back and looked at how I treat myself and I treat my business and think about how I think about my business. Right. And I'm so fortunate, it was like, gosh, there was probably a time where you're like, oh man, I only had 10 closings this month. And now it's like, if you get 10 closings, right? Like 10 closings is an amazing month, right? And there's probably many people doing way more than that, and whatnot, I'm sure. But like, that's, if you're doing 10 loans a month, that's 120 people that you've helped with a mortgage over a year's span. That's a huge amount of people, right? I mean, we're truly helping people. And if you're doing that amount of loans, you're probably also making some decent money, right? No matter how many basis points you're making, you're still making some decent coin there. And I think we need to highlight that more, is that, and not just as loan officers, but the people who are in our support staff and, operations and all that kind of stuff too. I mean, the business is a financially lucrative business, and that shouldn't be the reason you go into it. That is an added bonus, because at the end of the day, we're helping people create generational wealth and stability. And it's a pretty amazing thing that we have to do as mortgage advisors.
I agree. I've always looked at it like this. And I stole this from another place, right? Because again, everything's just copying, but numbers and money follow, they don't lead. And if you focus on taking care of other people, taking care of their families, putting their needs ahead of yours to make sure that they are in the best situations possible, all of the success and the money just comes with it, right? So if you just focus on doing the right thing for people, all the rest of those kind of things come with the job. So,
For sure.
I mean, it's there's not a whole lot of careers, jobs that you can do out there, where you can literally have a 5-minute conversation with somebody about just where they want to go in life, what they want to accomplish, and how they see themselves and their family in the future, where you can literally, with your products and your knowledge, go ahead and change their life trajectory completely. We did this just a couple of months ago. We were able to go ahead and close a Michigan loan for somebody who was literally living out of their car, truly homeless person. And we were able to go ahead and get them into a house.
Wow.
That is
pretty
lasting
cool.
impact into somebody's
That's amazing.
life. For sure. Yeah. I mean,
great story.
Yeah. 20% of what we do is low to moderate, income stuff here at the credit union. And I'll tell you, when you're, and this, Steve, I mean, you've been there before. When you can show up at the closing table and you're helping a family and they're literally crying at the closing table, crying for joy about how happy they are that you were able to go ahead and change their lives. And you're getting hugs from family members
Yeah.
that you don't even know their names. And you're like, hey, look, thank you. And you're like, and this is the 5th hug I'm giving here at the closing table. It's so amazing, that feeling where you're able to go ahead and like literally change somebody's life. I mean,
Yep.
at least when I go home, that's what keeps me going every day. That's my why. That's why I get out of bed, because it's making those positive, lasting impacts in people's lives and putting them on the right course for success. So
Definitely. That brings up a good point. Go to your closings if you can, loan officers. It's the best opportunity to put a rubber stamp on things. Even if I think it's even more important when the process doesn't go well. If your client was maybe they don't understand the process or whatever, and sometimes they get upset. You didn't close quick enough or whatever, or there was some landmine that you had to get through. But especially in those deals, when you go to closing, you can smooth everything over and say, hey, you know what? It's great. We made it through. Look, I got you this great rate on this awesome home. You're going to be a homeowner now. Hey, nothing better than that, right? So I think even in the transactions, and most importantly, in the transactions where it might have been more difficult to get it to closing, it's important to try and make it to those closings when you can. I know I try to.
without a doubt, it's the low hanging fruit. I
Yeah.
mean, you've worked hard the entire time to get the client to go ahead and take them through the process. That's the lowest hanging fruit. And it's a celebration, right?
Yeah.
When you're
Right.
there at the closing table, great time to like celebrate with them and ask them for referrals. Like, don't keep me
Yeah.
a secret. Tell your friends and family.
Yep.
And to your point, Steve, to your point, and this is huge, right? And I have really attempted to tell LOs about this over the years, because, there are those challenging transactions where things may have gone sideways during the transaction, right? And you're attempting to do maybe a mea culpa or something to go ahead and smooth it over through the transaction. Listen, when we get to the closing, everything is forgiven. Everything is
Yeah.
forgiven. You can show up and everybody is happy that we made it to this point. Great place to save face for yourself, but you can still go ahead and help them and ask for referrals to help build your business. Again, there's really no lower hanging fruit than going to your own closings.
Yeah.
So,
Yep. And you can, hopefully the agent is there, and you can, if you don't know them, you can, ask them for, a coffee or, whatever. So, yeah, it's just a great opportunity. And then you're showing face with the title company too. And again, this is a relationship business. So, the more you can get belly to belly to people with, I think that the better your business will be.
I might steal
Maybe
that from
that's
you,
just
Steve. Belly
what.
to belly. I like that.
Yeah. Yep.
I like that.
That literally has been, one of my terms and mantras is, I want to get belly to belly with more people, whether it's not just homeowners, right? I'm not looking at it in just that perspective. It's having genuine conversations with anyone I come into contact with, right? Like I don't have an ulterior motive with having a conversation with someone. I want to get to know them, make sure how's life, right? How are things going? I'm not in the back of my mind thinking, how can I get this person's mortgage? Are they ready to refi? Are they buying? You just don't want to approach it that way. But I think, this is another term. We're kind of throwing out a lot of terms and stuff here, but conversations equal closings is another term that I like to say. The more conversations you're having with people, the more closings you're probably going to have as a loan officer, right? At least that's the way I look at it.
If we're just throwing out phrases, I love the fortune is in the follow-up.
Yeah, that too. That's a good one, and as long as you're doing at least one of them good, right? I think that's the thing is consistency too, right? You got to be consistent with what you're doing. You can't pick and choose. You got to do the same things over and over, make it, replicable or whatever. So,
I mean, listen, we have a phrase around here at the credit union, and it's really straightforward, right? Champions aren't champions because they do extraordinary things. Champions are champions because they do the simple, everyday, ordinary things that's better than all the rest of us. They wake up every day. They do a call block from 9 until 11 o'clock every day looking for new clients. They return all their phone calls every day between 11 and 12:30. They do these repetitious things each and every day over and over again, which leads them to success, because that's really what you're getting at, is if you can repeat those processes each and every day and do the right things, you're going to be successful, period. I mean, I like to take really complex things and boil them down to really simple and easy to understand things. there's an equation in our business for success. Phone time, right, which is a quantifiable amount, how much you're on the phone, times your sales skills, unquantifiable, right, but it's a skill that can be increased over time. It's our trade, right, equals production, right? So we focus on what we can control within our lives, right? I can't focus on what's happening at the federal level or anything from that standpoint. But what I can focus on is how much I'm going to be on the phone today. And if I'm on the phone for a specific period of time, and if I'm any good of a sales guy, I'm going to be productive and be able to help clients be able to go and get into homes, build my business, and help them on their path towards home ownership. So it's these simple, easy, everyday things that sometimes we make way more complicated than it needs to be. But ultimately, in the end, those kind of things that you're talking about are true each and every day of the week. Hard work cures all woes, as they say.
Yeah, for sure. Well, we've gotten a lot of cliches and one-liners out today.
Haven't we?
What we you got your CMB pin on here, and this is the MMLA Connect podcast. So let's talk about yeah, baby. Hey, that's a lot of hard work. A lot of hard work. I'm actually going to start working on, the required classes to get to apply for my CMB. So that's a 2025 and 2026 goal for me. To start working on that. I'm going to get into the school mortgage banking next year and get going. So I'm excited about that. I'm looking forward at the opportunity to join a very elite group of people, and have that, help me and help me help more people. I think really is ultimately the reason why I want to get my CMB. Excuse me, I'm getting a little something in my throat here. But Grant, tell us about the MMLA and why you got involved and how long you've been involved.
Oh, wow. God, we should have started off on this one, right? So, so I got involved in the MMLA because I realized real early on that, I'm looking for the right way to put it, right? In what we do in our business, everything is relationship. Everything we do, from our clients to our processes to our vendors to everybody, it's a relationship in which we have. And, working with MBA at the more of the federal level, doing the advocacy every year, of course, getting their credit trigger leads bills through, which is, something that's been a hot point for me. I realized, early on that there was a guy named Brian McCowan who was doing some really amazing things here with the chapter locally at MMLA. And I wanted to get involved in it to know more of the players within the industry around here. There are a lot of really good people in our business that are members of the MMLA that, all together, collectively, when we come together, we are stronger in the messages that we need to be able to deliver, not only to the general public, but to our congressmen, men and women, and as constituents about what needs to happen for American homeowners. And so, like the MMLA led me towards, fighting for the credit trigger lead bill. Listen, that has been a passion of mine ever since it started kicking off in 2006. You don't want to get me in a room and talk about credit trigger leads and how and my feelings in regards to them. I'll keep it professional. But we've been working really hard to go ahead and put some guidelines, some barriers around that, so it doesn't affect American homeowners the way it has for the last 15 plus years.
Yeah.
And the MMLA is a big part of that, right? It's a Mortgage Action Alliance, big part of that. And I guess I look at it like this, ultimately the relationships that we have through MMLA, not only now, but in the future, are going to be cruxes to the growth of our business here in Michigan and ultimately nationally as well. So I don't know, does that answer the question, Steve?
Absolutely.
Maybe.
Everyone's got a different reason and different, the people that have pushed them in there, or they've seen people there, or, everyone's got their own story with the MMLA. And we love hearing those and sharing a light on those. And I think one of the biggest things you talked about, you had touched on it earlier, and you said, you can only worry about what you can control, and you can't control things on the federal level or the state level or whatever, which the MMLA is actually one avenue for us to actually start trying to help control some of those things, right? Like not necessarily controlling them, but advocating for, legislation that helps homeowners, right? It's pretty cool.
It is. I mean, the old adage of focusing on what you can control really saves a lot of people a lot of their sanity personally. But you're right to the point that like you can in some small ways be able to control some of those larger picture items that normally you wouldn't have the opportunity to do. And the MMLA is the tool by which we can do that on a greater level for a lot of people. So, yeah.
Yeah, it's pretty cool. I know my good friend and MMLA member, Jake Williams, has had the opportunity to go to the MBA, advocacy conference and
You
meet
should
with a
come,
lot of.
Steve. You should come. You'd have a great time. It's fantastic.
I would love to. I'd love to. It's definitely something that I'm interested in. So maybe in 2025 I'll be able to make it. But it is pretty cool. I had the opportunity through the MMLA to meet with Representative Huizinga earlier this year, which we had a one-on-one meeting. I think there was 6 or 7 of us, and we actually got to talk about the trigger leads bill with Senator Huizinga and tell him personal stories from our clients of getting hundreds of phone calls and text messages within 24 hours or whatever. I mean, sometimes it's pretty astronomical. So and quite a nuisance. So being able to fight for this trigger leads bill, to which I hope it passes. We're coming down, I think, to the wire on trying to get it passed through this year, right?
Well, most things in Congress now end up coming down to the wire. But the truth is that with the National Defense Act, either you're gonna pass it, or you're not going to pay your soldiers to go ahead and keep your military running. And I seem to think that we're going to end up paying our soldiers on this one. So
Right.
I'm hoping that it will end up being passed by the end of the year, and so we'll be able to see that take hold next year.
Yep.
Big win for the industry for sure.
Awesome. Good news.
No doubt. 2025 is going to be a beautiful year. It's only going to get better.
Grant, can you tell us a little bit about who you are outside of the office? You explained your why with work, but what is your why with your family? Tell us a little bit about what you do and the real Grant Spencer.
Oh gosh, the real me. Okay, so I guess honesty is always the best policy, right? So I met my wife in the business. She's a real estate agent, one of the top 1% in the state, and I met her actually in the middle of a purchase agreement, right? So which is a real funny story. I'll tell you about it later. But she tells me a lot of honest things about myself. She was a therapist for 7 years before she got into the real estate game, and she says these things to me, which you'll appreciate. She says, "Grant, listen, you only got 2 speeds. You either look like you're going to a wedding, or you look like you're homeless, right? So." When I'm not here in the office, honest to goodness, you could probably catch me in a pair of sweatpants, rolling around with the kids. Just
Yeah.
I love being a dad. I do. I I keep it real with my kids, and my wife might say you shouldn't parent the kids that way. Well, I do. It is what it is. Changing diapers again, yeah, because I love those challenges. What can I tell you, right?
Heck yeah, man. Those are
For
good
sure.
times.
Bring me some Pampers and some wipes. Let me get down, right?
Pro.
So yeah, we're with the girls. It was certainly a lot different than having my son, who is makes me earn every inch of the road. I like to say he is a lot different. But overall, I mean, I tell you, when I'm not here, I'm working, I'm doing something, and when the good Lord decides to call me back from this life, if they can carry forward just a little bit of what I have taught them and help them and carry it forward to somebody else, then I've done my job, and I've left this place a better place than when I found it.
Yeah.
So I guess that's kind of me, so.
I appreciate that, Grant. I think for me, trying to find my purpose and, I boiled it down to just helping people. Right. And that can sound so simple, but if you can help someone with the conversation you have or saying hello, and them being down, I mean, that's literally can be life-changing for someone if they're having a bad day. So, as simple as it might be, if you can just help people, and give without expectation, then, great things will happen in your life for sure. And it'll be fulfilling.
To he who gives more gets more.
Yep.
Mm-hmm.
Well, man, it's been great. An amazing time talking with you. Before we go and end the podcast here, I always ask everyone to tell our listeners one positive thing that we can look forward to in the industry or in 2025 or, in the future here. So leave us with your positive spin here, Grant.
Oh my gosh, my positive spin about next year and beyond. Okay, but listen, this is going to be real easy for me because anything gets better from here on out, right? There's only one way to go when you're on the bottom, right? We have gone through arguably the most challenging time in the mortgage industry than we have in the last 30 years, right? Inventory is coming up. We're seeing more people get out of houses. We're seeing more new builds go up, even though we see the new housing starts at recessionary levels. I hear that there is things happening at the federal level to be able to increase new homes being built right now. That's going to help solve our supply problem ultimately overall. Not going to be a silver bullet, but it's going to help. Okay. Secondarily, rates are still expected to come down off of multi-year highs, which is going to be great. Not only are you going to be able to help people get into homes, affordability question goes down, and you can help people be able to afford a payment. But those people that have the golden handcuffs of I'm locked into a 3% 30-year fixed rate mortgage, there's no way in heck I'm going to sell my house. Those folks that are my age, older, my folks, etc., who might need to downsize, but they don't want to go ahead and pick up a 6% rate to go ahead and get the same house, double the payment. Now with lower rates, we can unlock that. That ultimately helps the supply issue at the same point in time. We got more programs coming out. We can see greater help on the DPA side for people from affordability. That's where we are right now. It's only getting better each and every day, each and every month. So that's my spin on 25 and beyond.
Grant, that was beautiful. Great message today. We appreciate it. Thank you for being who you are, a big part of the MMLA. Also, I meant to mention it. Thank you for your state or your leadership, Southeast president this past year. So thanks again for that. It was a pleasure. Thank you to all of our listeners out there, and tune in next time to another episode of the MMLA Connect podcast. Thanks, everyone.